Hi, let's make a brief study on SAPE. This is the chart since the IPO, since late 1995, and the stock had this huge run here in the technology bubble, and then it came off to almost zero like most stocks in this sector. But recently, well, we had this huge gap down here on first quarter 2006 earnings, and but the stock has been recovering since this low here in August 2006, and the trend is now bullish, with the SAPE trading above the 50 days and the 200 days moving average. This 7.77 price is an important level because it is the closing of this big gap, and technically the stock could be coming up just to close the gap and then go down again, but it really depends on the fundamentals. So let's make a brief look. Let's check the short-term chart first. Here we had this golden cross when the stock had this big white marbozu, but then it came off to below this and then started rising again. The 50 days moving average worked well here as support, but now the stock needs to break out above this 7.77 resistance level. Over at June 12th, the company will release first quarter earnings and restate results going back to 1997, I believe. So that's going to be huge news, and the market is betting those news will be positive since the stock has been rising lately. As for my valuation model, these yellow lines are known facts, white lines are my estimates, and these dark yellow lines are calculated by this Excel spreadsheet. So we have the stock now at 7.74 and 123 million shares outstanding. I don't expect any dilution going forward because there hasn't been any over the past 4 years, so the share count has remained stable. And initial revenue, this is the revenue the company had in 2006. It was $421 million, and I expect revenues to grow 30% going forward, since they've been growing about 31% for the past 3 years, and I expect this to continue. This is an extrapolation of recent fundamental trends, and that will give me a final revenue for 2009 of $925 million. Net profit margin in 2006 was just 0.71%, but I believe this can expand to 10% because the company gave guidance of rising operating margin, not in 2007, not 10% net profit margin in 2007, but if revenues keep growing, I expect this to be reached in 2009. That will gives me a final net income estimate of $92.5 million, and which means earnings per share of 75 cents. If we apply the industry average earnings multiple of 28.97, we get to a final estimated share price of $21.75, which means if this is the truth, if the future looks like what I expect here in these estimates, the stock will return 41% a year on your investment, and the optimal selling price today would be $13.94. Why this price? Because at this price, with these fundamental trends, the stock would start returning less than 16% a year, but it is still far away from that at $7.74. So I consider it attractive. On a 1 to 10 scale, I give it an 8, but it all depends on the okay, it's an 8. Bye.